Иә. Бірақ мына не қош? 34 деген қош, жаңа қосып тұрған ана жерде. Айттың ба ана ертең кірмей тұр. Сілтеме арқылы
Плестеме.
қостың ба 34-ті?
34 қосып тұр.
Wi-Fi ма?
Иә.
Мынаны алшы.
Мына сілтемені маған жіберіңдер онда.
істеп тұр ғой,
Иә.
Жакой сілтемені жіберіңізші маған. Алдыға жіберіңіз.
Мен ноутбугымды алып кетесіздер ма сонда?
Неше минут болады, апай?
Негізі 2 сағат, бірақ енді ана отырмайтын шығар 2 сағат. Сен өзінен де сұрадың ғой.
Маған жібердің ба?
Жіберіп қойдым.
Маған жіберсін.
Сен кірсең,
Заново кірмей болады,
иә. Алып кетесіз ба?
Сен аны қалай еді? Неге қалай салады?
Сен не істейсің? Тұра тұр.
Тұра берсін, көре бәрі.
Жоқ, жаңағы ютубтың қайда? Мынау бұл.
Ютубанда тұр.
Адам кірмеген. Кіріңізші. Ссылкаға. Ақпақын саған жіберіп.
Білесіз істеп тұр.
Кіріп тұрма, көріп
Тұр ма? Тұр.
Енді мына ссылкасын алып берші маған.
Енді осын жібере салмайсыз, папа? Жібердім.
Таблицаға қоямын.
Иә, сонда таблица.
Мін тұр. Иә. Екі сағат отырма дейміз қазір. Тихо сиди. Все работает.
Which of the following committees addresses the ratification of historical separation, C. Jim covers the following information about the stock. Current price per share equal to $54. Current annual dividend per share equal to $2.5. Annual dividend growth rate for years 1 to 4 equal to $12. Annual dividend growth rate for years 5 plus equals 6%. Jim gathers the following information about the stock. Current price per share equal $54. Current annual dividend per share $2.5. Annual dividend growth rate for years 1 to 4 12%. Annual dividend growth rate years plus 6%. Average rate of return 15%. Based on DTM, the stock was most likely A. Valued, B. Very valued, C. Undervalued. The current price of the current price of the product is $10 and the current demand is 10 units. When the price changes to $7, the quantity demanded increase to 15 units. The price elasticity of demand of the product is 1.67, B1 equals C 1.35. The price of a normal good has increased and the purchasing power of consumers has decreased. The demand for its substitutes will A. Increase due to income effect, B. Increase due to substitution effect, C. Increase due to both substitution and income effects. Okay. Due to both substitution and income effects. Substitution effects. Increase due to income effects. Increase due to substitution effects. Okay. When the demand for a good rise due to increase in its own price, the good is most likely A. Normal good, B. Given good, C. Valuable good. If when the demand for a good rise due to increase in its own price, the good is most likely a normal good. It means it will be given good. Altair Japarov left his job while he was making $35,000 per annum to start his own business with an initial investment of $70,000. He had an option to invest this amount in a friend's business where he would have earned $33,000 per annum. Profit and loss statement for first year of Altair's business is given below. Total revenue $200,000, cost of raw material 15,000, wages paid to employees 20,000, interest on debt 3,000. What is the economic profit for Altair's business in the first year? Oh my God. Okay. Chaplin, a chain of movie theaters, is offering weekday morning shows at discounted price. If tickets are priced at $25 per show, then 400 customers are expected each weekday for the morning shows. But if the tickets are offered at a discount price of $20 per show, then 600 customers are expected each weekday for the morning shows. The marginal revenue per customer earned from offering the discounted price is closest to A $5, B $10, C $40. Mhm. Chocolate chains are priced at 25 per show, then 400 customers, maybe 10,000, 12,000, and this would be 10. Space Light Incorporation is operating under imperfect competition. Total cost for the fair is $64. Total variable cost is $54, and total revenue is $60. The firm should A. Operate in the short run but exit in the long run, B. Shut down in the short run but can operate in the long run, C. Operate in the short run as well as in the long run. That can be $1 to $60, then $54. This would be me operating the short run. Megastar Investment is a hedge fund with 550 million initial capital and a 2 and 20 fee structure. The 2% management fee is based on year-end assets under management, and the 20% incentive fee is not independent of the management fee. The value of the fund at the end of year one is $652 million. The investor's net return is closest to A. 12.47%, B. 12.94%, C. 15.31%. 500, okay, so 20% incentive is to need to multiply this by that. Say that the value of the fund here is 7, okay, 7.45, 52. This will be 12.45. Under perfect competition, what will a firm least likely earn in the long run? Normal profits, B. Zero economic profit, C. Positive economic profit. Next, we see this positive. Positive economic profit under perfect competition. The following equations show the demand and cost curves for a company. Demand curve P equal 135 minus 5 multiplied by Q. Total revenue curve TR equal 135 multiplied Q minus 5 multiplied Q, and second, marginal revenue curve MR equal 135 minus 15 multiply Q, total cost curve TC equal Q in the third minus 10 multiply Q in the second plus 65 multiply Q plus 110 average cost curve AC equal Q in the second minus 10 multiply Q plus 65 plus 110 delete Q marginal cost curve MC equal 20 multiply Q plus 65. The profit maximizing output for this curve is closest to A2, E5, C7. Martins will be in. If we have the mark curve 135 minus 5, we need to find Q. Okay, here we go. Everything. Probability. Among two dominant companies operating in the smartphone manufacturing industry agree. The agreement, both companies will engage the agreement, both companies will honor the agreement. Company owners they both have the same. It means that company A or both companies first name and their I think this can be that both companies will reach the agreement. Analyst 1. Over time, the market share of the dominant company in an oligopolistic market will most likely increase. Analyst 2. Over time, the market share of the dominant company in an oligopolistic market will most likely decrease. Which analysis is correct? Okay. Over time, the market analyst 2. Which of the following models most likely describes a situation in which no firm can increase profits by changing its price to output choice? A. Kindred demand curve model. B. Cowrie-Knott model. C. Dominant firm model. Dominant firm. Which of the following models and airline segments customers into business travelers, and leisure travelers? It charges a higher price for the business segment. This is most likely an example of A. First degree price discrimination, B. Second degree price discrimination, C. Third degree price discrimination. In a simple economy with no foreign sector, the following equations apply. Consumption function C equal 3,500 minus 9 multiplied T. Investment function I equal 700 minus 35 multiplied R. Government spending G equal 1,100. Tax function T equal 315 plus 2 multiply R. R real interest rate. If the real interest rate is 2%, the aggregate income will be closest to A 1.4, B 2.139, C 3.500. The following table shows the GDP data of a country measured at the market prices in domestic currency units for the year 2014. Consumer spending on goods and services 986,070. Government spending on goods and services 416,700. Business gross fixed investment 397,500. Government gross fixed investment 95,230. Change in inventories minus 79,700. Capital consumption allowance 9,615.
Мне звонят, озвучивать нельзя. Я думаю, он один сидит. Я закрыла сразу. Ну, все равно. Озвучивать так остается.
Prices in domestic currency units for the year 2014. Consumer spending on goods and services 986,070. Government spending on goods and services 116,700. Business gross fixed investment 397,500. Government gross fixed investment 9,533. Change in inventories minus 79,600. Capital consumption allowance 9,610. Transfer payments 9,400. Statistical discrepancy minus 3,160. Increase 3,299,900. Inputs 360,990. Using experimentation approach, the country's gross domestic product (GDP) 2014 is closest to A 171,200, B 178,0850, C 179,050. The share that economy is composed of two products, A and B. House prices and production details are given below. Product A, quantity produced in 2017, 218. Quantity produced in 2014, 253. Product unit prices in 2013, 10.5. Product unit prices in 2014 and 11. Product B was produced in 2013, 139. Quantity produced in 2014, 117. Product unit prices in 2017 and 11. Product unit prices in 2014, 6.1. So 2017 is a great year for major GDP. GDP rate of the economy is 103. Point five. The unit price of the 2013 closes to a 1.5. This is 7.5. If the GDP declined values were 2012 and 2020 were 181 and 192% respectively. The annual growth rate of the overall price level is closest to a 2.06%, being 4.60%, C 5%. Consider the following data for 2015 for a hypothetical country. Economic consumption amount 26. Statistical discrepancy 0.4. Capital consumption amount 1.2. Government spending 6.5. Imports 2.7. Gross foreign domestic investment 3. Exports 2.5. Based on the given numbers, the national income for 2014 is close to A 31.7, B 33.7, C 35.3. If capital is provided to government for its operations, but if work commercial production and service are procured, then it's most likely A. Pension investing, B. Seed stage financing, C. Early stage financing. U.S. Treasury bond equity 2.5%. 4-year corporate bond equity 3.5%. 6-year U.S. Treasury bond equity 3%. 6-year A-rated corporate bond equity 4.75%. 5-year U.S. Treasury bond equity 2.75%. Using market pricing, the yield on 5-year is 23. This was true.